Hi there. It is June the 10th, 2020. This is Real Estate Hot Areas in Vancouver Market. My name is Christian Dye from Latitude-West Financial. And with me, I have got Mike Stewart from Oakwyn Realty Downtown Limited. Mike has been a top producing realtor since 2005. You could find him at vancouvernewcondos.com or at MikeStewart.ca. So, Mike, first and foremost, thank you so much for coming on. How are you doing?
Oh, I'm good, Christian. Thank you very much for having me. It's a real pleasure and an honor. And yeah, thank you again. Appreciate it.
No problem. So I ask everybody that's listening to keep yourself on mute. If you do have any questions, we are taking questions at the end, but please just put them in the chat and then we will field all of your questions once we get to them. So let's get right into it. First and foremost, let's stay safe, follow the rules, and big gratitude out to our frontline workers. A quick little disclaimer reminder, the information given today is not to promote the buying or not buying of any real estate. We're just advising you to do your own research, and we are using all of our samples as educational purposes only. So let's get right into it. Mike, let's talk about what's happening in the market. Now, Mike, since him and his team have been basically on the front lines of real estate, any information that comes through different media channels usually are a couple of months old because they need time to collect it. But what Mike and his team are seeing is what's going on with buyers and sellers right now, and it changes it changes much more quickly. So tell us, Mike, what are you seeing in the Vancouver market in terms of activity with buyers and sellers?
Yeah, thank you. Yeah, absolutely. So we are at the front lines. I work with a group of about 10, 8 to 10 realtors, I should say, all across basically uh, the Greater Vancouver area, the Fraser Valley, and Southern Vancouver Island. So, we have our finger on the pulse of what's happening. We do a lot of pre-sale, pre-construction, new construction. We do a lot of resale properties, so that's existing properties, and we do single family houses. We do a lot of condos. We cover the range and run the gamut in terms of different property types. Now, what we're seeing is actually quite interesting. We've seen a big drop off that is reflected in the statistics, and I've got Christian and I have a statistics package that we can forward to anybody who's interested for detailed information, along with this conversation. And what we've seen is a big fall in volumes, but what we have not seen is a big drop in price. Okay. Now, there's some commentators out there who I would argue maybe are not really in touch with what's happening here in Vancouver, who have been sort of uh, predicting a massive and dramatic fall in prices. And the unfortunate fact for them is we're just not frankly seeing that. We have seen some price softness for certain types of properties in certain areas, but based on what's happening with the statistics and with what we're seeing, on the front lines across the market, is prices are stable. And the reason for that is because what we're seeing that central banks and central governments are doing across the world, the Bank of Canada, Canadian federal government, the U.S. Federal Reserve, the U.S. federal government, the European Central Bank, the European Union, and the central governments and central banks of all the major economies, is they're creating a situation that is a sort of a variation of the wealth effect. And so basically what central governments are doing, what central banks are doing, is they're cutting rates dramatically. So, you're seeing 5-year fixed rate mortgages at 1.99%, which is crazy, crazy low. You're seeing central banks doing something called quantitative easing, which is just basically a fancy word for printing money. And then you've got central governments like our federal government, who's gone into debt by about 175 to 250 billion dollars this year, and spending that money in the economy to keep the economy going and to keep things, to keep economic activity happening. And so basically what the effect of these of the quantitative easing, the super low interest rates, and the massive deficit spending is to create what I said, a variation of the wealth effect. And that what that basically is all this spending pushes up the value or maintains the value of stock portfolios and maintains and pushes up the value of real estate portfolios. Okay, and what that is designed to do is to avert what we saw in 1929 to 1932, which is when we had what was called a deflationary spiral. So 1929, 1932, governments did the opposite. They cut spending. Central banks did the opposite. They raised interest rates. They removed stimulus from the economy, and then you had the deflationary spiral, which resulted in the Great Depression. Now, the process that we're seeing now was sort of pioneered by Ben Bernanke, who was head of the Federal Reserve during the 2008-2009 financial crisis, and we averted a much worse crisis because governments did exactly what I was saying, is creating that wealth effect by quantitative easing, printing money, cutting interest rates, and massive government spending to keep the value of stock and real estate portfolios stable so that people with money would continue to spend. And that effectively is the variation of the wealth effect I'm talking about. And that's what we've been seeing. So, real estate prices, have softened for certain types of properties and certain types of areas, but for certain areas, prices are continuing to rise. And prior to the coronavirus hitting, basically up until February, prices were rising for many housing types and across the region, and volumes were up about 45% compared to the year before. So basically, the way I would characterize the effect of the coronavirus on the Vancouver market is that it is it's sort of the market went on ice, okay, and it affected volumes, but it didn't affect price so much. And that's basically what we're seeing in the market. What are your thoughts, Christian?
I absolutely agree, and I am not on the front lines of real estate, but I am the front lines of financial planning with my clients. This last month alone, I had three separate clients all buy real estate, and for one of them, a little bit earlier on, they made a mistake of kind of going in too low. They were the only buyer. They were the only person bidding. They went in way too low. The person essentially didn't take the offer, probably didn't even entertain the offer. And then they gave it a week. They said, okay, well, why don't we come back with a more reasonable offer? And then all of a sudden there was somebody else on the table. And now, and they asked my advice, and we had a long conversation. I said, how much do you like this place? And it says, we love this place. And I said, my best piece of advice is they have already priced in the discount. They said, oh, it's a really good deal because, it's lower than the assessed value from the year prior. So we already feel we're getting a little bit of discount. But what we want to do is we want an even deeper discount. I said, don't play that game. You're not going to get the place. So they said, well, what offer do you think we should go with? And I said, to be honest, your best possible offer. And if it's asking, then go in with asking. They went in with asking and they lost it. They didn't get it. The other two clients that I had that did buy, they paid almost asking or very, very close to it. One got it and the other one didn't, but the other one, they're about to buy another place. So, but these people, none of them were buying in January or in February. So what I found is that there are people that have been on the sidelines. They feel that it has now been priced in. COVID-19 is starting to settle down a little bit with the world starting to open back up. They do need a place to live. They're sitting on the sidelines with cash. I think the person who has to sell and then buy, they're in a trickier position. But anyone that's sitting on the sidelines with cash right now, they're active, they're looking. I know several clients who are looking right now.
Yeah, go ahead, sorry.
I was about to say, before we jump into future outlook, from what you're seeing, you said that the volumes were down, but the prices didn't go down as much because we were lower because of 2019. But what have you been seeing like recently, like this month?
Yeah, so a lot of the news media has been sort of quite there's been quite a consensus in the news media that real estate is doing terribly, and that they've been uniformly pessimistic with few exceptions. But the reality of it is things are actually quite hot for certain things. Like, for example, single family houses in East Vancouver, prices are rising for those right now. And that's what we're seeing anecdotally. You're seeing multiple offer situations for development lots that you can turn into a duplex. Condos on the west side of Vancouver are up 5.6% over the last year. Prices are down by about, I'm just going to have a look at the stats here, but prices are down a little bit over the last month. But it's I would argue that is just a reflection of sales that occurred when the news cycle, which hugely influences real estate prices and real estate activity, was extremely negative. But as things begin to pick up, you're going to see things really start to ramp up in the real estate market in terms of volumes. And I would say, I would expect prices could continue to rise. And the reason why I think that is because if you look at the signals from the Bank of Canada, they're going to keep monetary conditions in Canada very, very accommodative and keep that stimulus for a significant time after this crisis is over, because we've got to make up for lost GDP that was lost during this crisis, because real estate and real estate transactions are hugely stimulative to the economy and are a very powerful way for central banks and central government authorities to get the economy back up and running. And just like they did with 2008, 2009, the federal government and the Bank of Canada are going to use real estate to reflate the economy. And you can see that happening in some of the policies that came out. I don't know if you guys have noticed, but the Department of Finance, who covers mortgages, have tightened mortgage conditions because they're worried that housing prices could go crazy, which I don't think they are going to go crazy, but I think you're going to see upward pressure on price with the amount of stimulus from the Bank of Canada and from the federal government in terms of all the deficit spending that we've been seeing.
No, but a lot of people have come on the webinar today because of the title, Hot Areas in Vancouver. You and your team are on the front lines. Are you seeing hot? And I guess my version of hot is it's either in demand, so it's an area to keep an eye on, or a place that you actually do feel is discounted for whatever reason. Can you give us some specific areas that you are seeing?
Absolutely. So we're seeing something that is very interesting, and it's happening right now. So I don't know if you guys are familiar, but a lot of the people, there was a homeless encampment in Oppenheimer Park in the downtown east side of Vancouver. And basically the city of Vancouver secured housing for all these people during the COVID-19 crisis. And so what's happened is a lot of the people who typically would be in the downtown east side have been moved into quite popular and attractive and quite high-end areas of downtown Vancouver. Now, what we're starting to see is a buildup of supply of one-bedroom condos in downtown Vancouver, which is very rare, which we very rarely see. And I would argue that some of the slowdown in market activity for the downtown Vancouver market one-bedroom condo market could be attributed to the fact that, you've got a lot of these homeless people or formerly homeless people are sort of congregating in areas that they wouldn't normally congregate in and sort of engage in antisocial behavior like, open drug use or public drinking or, all sorts of unpleasant behavior in areas that they typically aren't in. And so, downtown Vancouver, one-bedroom condos, I think right now could be a very, very good buy because we're seeing a large amount of supply for that specific type of property. And we have seen some discounted sales just recently. So that could be a very good one. And I like downtown Vancouver condos because I think that the situation with a lot of homeless people in areas that they normally aren't in, it's going to be a temporary thing. Because once COVID-19 is done, I predict that these people will go back to the downtown east side and the situation will change. So that could be a very good opportunity to buy one of these one-bedroom condos, which get very, very good rent, are very popular, and have been historically and traditionally very, very good investments from a capital appreciation perspective and good from a rental perspective, very stable, a lot of demand for those kind of properties. Another thing we're seeing with the COVID-19 thing is because I would argue that remote working and Zoom meetings and working from home has been proven as a successful way of doing business and operating large organizations by the COVID-19 crisis. I think a lot more institutions, a lot more businesses, and a lot more bosses, particularly the older ones, are a lot more comfortable with allowing people to work remotely. And so we've got people that we work closely with who are in our group who are in Squamish and in Victoria. And we've seen a big uptick in activity in those markets because people are starting to move to those places, or basically thinking, why would I have a townhouse in Burnaby, and I love to go mountain biking, and I got to drive a half an hour to get to North Vancouver, when I can sell my townhouse in Burnaby, move to Squamish, pocket a couple of $100,000, and I can ride my bike to those mountain bike trails, and I don't have to commute to work anymore, but I can still spend the 8 hours that I need at work, in front of my computer and work remotely. Or, I'm a big sailor, and, I had a house in Coquitlam, but I love sailing, but it's a real pain in the backside to get to my sailboat. So maybe I'll work remotely, sell my house in Coquitlam, buy a house in Victoria, pocket a couple of $100,000, and, and be, a walk to my boat, and have way cheaper moorage and access to beautiful, places like the Gulf Islands. So I think with COVID-19, you're going to see a lot of changes like that, where people who are established in their careers are going to sell properties in areas where they're living because they feel they have to because of work and their kids, and are going to move to places where they want to be. Now, downtown core cities, I think, are still going to be very popular with younger people wanting to establish their careers. But I think markets like Squamish, Victoria, places that people want to live because they want to live, not because they have to live, are going to become more and more attractive with the wide acceptance of remote working. So I think those two markets could be very good opportunities for investors. But you might see people wanting to move there. They may want to buy, but also they're going to want to rent. So I think those two places are great places. Another thing about Squamish is there's no foreign buyers tax, which is a very, very nice thing, particularly because overseas people can buy there without that punitive 20% foreign buyers tax.
No, thank you so much for those areas. And I know you've always liked the Broadway corridor as well. And
Yeah, absolutely.
tell me
Lot of
again,
density coming
tell
with
me
the
again,
SkyTrain.
yeah, it's because of the future light rail that's coming in. Is that correct?
It's actually not light rail. My understanding is they're going to do a SkyTrain system. It
Okay.
eventually is. Right now, it's going to Arbutus, but they're working with provincial government, federal government, and various First Nations to get it to go all the way to UBC. And there's a lot of positivity surrounding that. So, if you're looking for long-term hold capital appreciation, and you want something that's a little more conservative, you know what I mean? It's on the west side of Vancouver. It's a good area. It's a decent area. Broadway corridor is a very, very good place to buy,
Sure.
particularly older condo buildings that are solid, because those buildings, you're going to see where those buildings, particularly a low-rise building along the Broadway corridor, you're going to see big upzoning coming associated with the expansion of the Broadway SkyTrain, it is going to be a SkyTrain. So very, very good place to invest. And thank you for reminding me on that,
Yeah,
Christian.
no. And I wanted to touch base on this because I know you sent this to me regarding pricing. And you have your opinion on pricing, but we also have our facts on pricing. And this one over here, explain a little bit what this graph is showing.
Exactly. So what this is this is a home price index. Okay. Now it's basically 100 is January 2005. Okay. So you can see basically prices since January 2005. And one thing to note, this is not prices for specific neighborhoods. This is the Real Estate Board of Greater Vancouver. So it's all areas, but different property types. So as you can see, since January 2005, prices are effectively 250% what they were 15 years ago. Okay. Now you can see at the far right of the chart, okay, you can see, September 2019 down at the bottom, if you bring your mouse down to the bottom.
Yeah.
Now, if you look over to the right, May 2020, prices are actually up. You can see that reflected March 2020. Prices are up since late November. So, sure, there's a slight arch down, a slight move down from March 2020 to May 2020, but based on what I see, you're going to see those prices continue to rise in line with what was happening before COVID-19. Because the thing to think about COVID-19 is this is not a political, war type crisis like we had in the Second World War. This is not the financial crisis where we had, suspect financial assets underpinning the entire economy, and there was total, lack of confidence in the financial system. This is a health crisis, and we are dealing with it, and it is a solvable issue that we have been dealing with. And humans are immensely adaptable. And I don't know about you guys, but we are adapting, and I'm optimistic that we're going to be just fine. And the CMHC came out with this report saying prices are going to crash by 18%, and they're saying that's going to happen everywhere in Canada. But we're in a country of 32 million people, 33 million people. It's 5,000 kilometers wide. The real estate markets, city by city, are vastly different. Okay, I would argue Calgary is a very different real estate market than Vancouver. And then within Vancouver, as you can see from the charts, big differences in terms of what properties have been doing. The foreign buyers tax, really crushed sales in West Vancouver, west side of Vancouver, Richmond, because that's where all that international money from China, money from Iran, money from Russia was going, and that stopped with the foreign buyers tax. But condos, properties that appeal to a local market, those prices are up. They're stable.
No.
So I would argue that that's a lot of what you're reading in the media. To take a line from one of my favorite bunch of people, Public Enemy, don't believe the hype, folks.
No, excellent. Now, between that and your connection to the downtown east side undesirable areas, geez, I'm getting a little insight into what your childhood was like. But this over here is an amazing report that you have access to, Mike. It breaks it down. Benchmark, price index, monthly change, Burnaby East, Burnaby North, Coquitlam, Ladner, Maple Ridge. Like, this is an amazing document. So unfortunately, we don't have time to go into all the statistics, but for those people who are interested in receiving a copy of this report that breaks things down, all the numbers, all the graphs for May 2020 up until now, by area, I suggest that you connect with Mike at the end of this talk, and I will show you how you can do that. So this is a snapshot of the report, but the full report, Mike can send it to you. All right, so I do want to be respectful of people's times over here. So I wanted to see if anyone did have a question about anything that Mike has maybe talked about now. If you want to put it in the chat, then I will read it to Mike. If you want to, stay on mute, but then put it in the chat, you can go ahead and put in the chat. But while we're doing that, Mike, I do have a couple of questions myself over here. You talked about pre-builds, okay? What is your sentiment on pre-builds? What are you advising your clients right now, and why in regards to pre-builds?
Basically, with a pre-sale is a bet on the future of the real estate market. Because you're buying something that you're paying today's price for, and you presumably want it to be worth more than what you paid for it in the future. And so we have seen, it's been slower and volumes have been down for that. Throughout the crisis, I've been active and I've done transactions, and I've done things that, a lot of people are surprised to see sell. Like, for example, 6 weeks ago, I sold a $3.3 million penthouse at 777 Richards. I sold a pre-sale in North Vancouver. We've been doing all sorts of different types of properties. I sold a half duplex that we're developing ourselves just a couple of weeks ago. And pre-sales and new construction have been very active. I think there is a lot of confidence. Well, I know there's a lot of confidence in the market going forward, and pre-sales are still selling. Again, volumes are down, and the reason why I think they are is because of friction in the economy due to the COVID-19 thing. But that eventually is going to end as we deal with as we create ways to, as we master ways of doing business in a way that is safe from a public health perspective. But yeah, a lot of demand for pre-sales. We shut down our email campaigns when things were really bad with the news and whatnot. But now we've started up, and we have very big email lists. We have, we sent an email out this morning. We're getting very good responses on people interested in pre-sales. And we do have if you guys are interested, we've got a pre-sale email list. That's our VIP list, where we talk about new pre-sales throughout the region. And we've got different regional lists. So we've got a Vancouver list, a Burnaby list, a Surrey list, a Victoria list, a Fraser Valley list, where we send out pre-sale projects in those areas. And there's a lot of demand, a lot of interest, and a lot of activity. And if you guys are interested, just reach out to me and I can definitely add you to that list.
Sure. Okay, so I've got a question here. Once mortgage deferral program ends, and with unemployment, when the numbers are released and are in the double digits, what do you think the biggest impact will be on the real estate market?
That's a really interesting question. I've thought a lot about that. So in the news media, there's a lot of negativity in terms of employment and in terms of how people being able to afford and buy property. Now, what I've noticed in my own anecdotal experience, but you need to keep in mind that I'm speaking to people who can buy, who have the financial resources to buy and sell real estate. Most of the people that I've been speaking to who have the financial resources in the Vancouver area to buy real estate have continued to work throughout the crisis and work remotely. Okay. And the reason being is because the way their businesses are set up is they can continue to work. And these are people like doctors, accountants, lawyers. They are people who make a high income and continue to work. Whereas what I would argue that a lot of the unemployment has affected people who maybe didn't have the income to afford to buy real estate in the first place. So people who are working in the hospitality industry, the restaurant industry, the airlines, those kinds of industries where the average income level is rather low. So I don't necessarily think that there is an upcoming financial cataclysm because of withdrawn supports from the federal government and because of the end of the mortgage deferral program. And I would argue that a lot of the jobs that were easily lost are easily going to come back because they are relatively simple jobs. People who work for the airlines, people who work as servers, people who are working in businesses that are relatively low skilled and relatively low paid. So yeah, I'm not seeing any of that doom and gloom stuff.
I I
In my
I I I
speak to.
I tend to agree as well. That's the same thing. The majority of my clients that during COVID-19, except for the dentists, but the majority of my clients essentially kept working. The ones who stopped, it really was ones who were a little bit on the lower end of the employment scale in terms of income. But everyone else, it really was more of a changing in how they did business. But there wasn't, like, for example, let's say they say there's a 15% unemployment. Among my clients, there was not 15% unemployment at all. And going forward, it will be back as normal. The other thing that I wanted to add to this, I was on a webinar myself this morning from an economist, and she was predicting through the data that she had sifted through that we're going to be in a low interest rate environment for quite some time in order to get the stimulus going. Whenever we've seen that low interest rate environment, we've always seen real estate stay steady or grow. It's never gone the other direction in a low interest rate environment. People like to buy and people like to invest. There are people who have multiple real estate properties. You have those people who are investing as well. So I do think I share your sentiment over here that I don't really think that the doom and gloom is going to come down the pipe. So Mike, what I want to do over here is I just kind of want to start to wrap up and conclude. So here, my final conclusion has always been the same thing. Do not try to time the market. What you want to do is, if you are thinking about real estate, don't worry so much about the market, worry so much about finding the right product for you, whether that is an investment or whether that's your own personal home. I've seen too many people make the mistake of attempting to time it, waiting for the price to bottom out, and things of that sort, and they've always gotten burned. So my predictions on the market, I do believe that there's going to be a three-phase recovery. I could talk a little bit more about that. I don't have time today, but I do think it'll be a three-phase recovery. On Saturday, when I have my stock market update webinar, I will be describing in detail what the three-phase recovery is. But I do believe that the interest rate environment will stay low. Because the interest rate environment will stay low, real estate will stay in demand and not go down. So what am I doing with clients right now? We're reviewing strategies with our clients to ensure that they're taking advantage of opportunities in a safe way. This could be in the real estate market. This could be in the stock market. So shifting gears a little bit, people should have a diversity of where their investments are. The stock market is down. There is no doubt about that. We have made some significant gains literally in the last week or two, but that's just because of certain sectors. there still is opportunities over there, and people should be talking to their advisor. If they do not have an advisor, or if they're doing this on their own, it is the time to start getting a professional involved. Why? Because it's going to be a very volatile few years over here. You want people managing who know what they're doing, who are looking at this stuff every single day. If you're a real estate investor, by all means, you should also have a professional taking a look. So some of the analysis that we do is trying to see whether a 2 investment property makes sense or a 3 investment property makes sense, whether it's the right time to leverage based off of cash flow, based off of other equities they could borrow from. So a great statistic was done by Manulife saying that advisors help people increase their wealth. They did a study which showed the longer you maintained and used an advisor with their advice, the greater the multiplier of wealth was compared to not having an advisor. This is the same whether it be in real estate, whether it be in with a financial advisor as well. So once again, we do have a couple of other webinars coming up over here. On Saturday, we have our weekly webinar. For those of you who have never been on it, it gives us an update of what's going on in the stock market, as well as the trends that we're seeing, as well as the sectors. So you could register at Latitude-west.ca/workshops. And we have other ones as well in our June lineup. So one of the other ones is in July, coming up on July 11th, we have our Investing Basics 103. This is where I show technical tools. We're taking out the calculator, we're taking out apps on our phones, and I'm showing how to evaluate whether it be stocks and real estate. All of our workshops can be signed up at Latitude-west.ca/workshops. And some of them are, we always record past ones as well. One very popular one that it just passes for if there's any new couples out there, people who are, starting a family, getting into the real estate market, trying to figure out what life is going to look like with new baby. This session is already passed, but we did record it. If you would like a recorded link for those of you who are looking to get into the real estate market, or maybe starting their family, then by all means reach out to assistant@latitude-west.ca and just request the recorded link, and we could send it to you. So I want to end over here just because we're a little bit over time. So if you're ready to connect with myself, Christian Dye, Latitude West Financial, to go over some financial planning, or with Mike Stewart at Oakwyn Realty, here's our contact information. With myself, assistant@latitude-west.ca. With Mike, we can go mike@MikeStewart.ca, or Mike's cell number is 604-763-3136. Now, for many of you, if you'd like to do a little bit more research on your own, Mike has got that wonderful data package, which talks about what is going on in the market and breaks it down per region. If you would like that package, or if you'd like to talk to Mike, by all means, please reach out to him. So Mike, I do want to wrap up. I do want to have you on again, Mike. I will reach out, and then I'll blast it to my group, and then you could let us know what's going on in the front lines of real estate.
Absolutely. Thank you very much. And folks, if you have any questions that we didn't cover in this in this webinar, please feel free to reach out to me, 604-763-3136, or email me at mike@MikeStewart.ca. Christian, thank you again for having me. And folks, thank you very much for joining us. It's been a real pleasure.
All right. Okay. Thank you so much. Okay. Bye now.